Hey guys, welcome back to Financial Markets. Hope you're all doing well. Just before we begin, top of description, I've got my cash tag and the Cash App link. It's free to download. If you can donate and help out support this YouTube channel, it would be very good. Obviously, it costs me a lot of time and money. And hopefully the information I'm giving you is effective. So if any donations you could do, it will be very much appreciated. Anyway, so let's begin with the video. So Apple reported earnings today, and it was an interesting quarter. It was the first 3 months for the year that they reported, and Apple has obviously just a quick briefly about what's happened to the stock over the last 2 quarters. We had a massive decline as we did with loads of names by Q4 of 2018, and we plunged to about $145. Since then, we've had a massive increase in share price. And whether that's fundamentally because of the company, I don't really think so. I think it's more because it was just massive inflows back into the market after a massive decline, and so a lot of people were just pushing money back into the market completely, and that's why loads of stocks, not just Apple, have gone up by 20-30% from its lows. But today specifically, they reported their first 3 months quarter earnings, which is something that's good to drill into. So the reports came out, and after hours, or pre-market if you will, the stock has jumped about 4-5% to about $210. So we can see the market open will be around at this point here, and then will obviously just be off by about 10-15% from its all-time highs again. Now, just to understand the numbers a bit briefly, first things first, the numbers wasn't impressive, if you will. It was more that the expectations were low. So Apple beat those expectations, and therefore naturally, as you do with the stock, if you beat the expectations, then you would have an increase in your share price, and if you miss expectation, you decline. And the reason why the expectations were low is because of the continuing effect of that whether iPhone sales is something that will keep dragging on Apple and keep generating money for them to that level and keep getting growth on the top line. So we had a 17% decline in revenues in the Apple first 3 months of the quarterly earnings, of which obviously I think it was about $58 billion revenue, of which $31 billion came from iPhone revenues. Again, so that shows Apple is still heavily dependent on the iPhone sales, which is over 50%. And then the idea is that the profit they had made for the 3 months is 11.6 billion, which was ahead of the expectation, which is why we had a massive uproar pre-market or after the announcement of the results, and so we're up about 5%. But obviously this is after we've already had loads of headlines about China's slowdown in growth, how that will impact iPhone sales. Tim Cook saying out that there would be a slowdown in the reports, that slowdown, sorry, in the revenues, the incomes, the profits. And this is quite unusual thing, because Apple has never reported something like that since 2002. So it was definitely interesting for him to report, but it's also quite a strategic and tactical play, because that helps to prevent any massive downfall in share price if it's a shock. So the idea is to slowly drip feed the market, let them know, look, we're having difficulty times, so expect lower revenues and earnings. And so analysts, investment bankers, which is something I used to do, go in, we revise our reports, and then we start putting down the estimates for the next quarter. And so what does that do? For Apple, it's a perfect scenario, because then as long as they beat those, the share price continues to rise, and this is exactly what's happened in this case, and which is why we're nearly back at all-time highs, potentially again at 230-ish. So yeah, I hope you guys enjoyed this video. Hopefully it made sense. Leave some comments below what you think is the future of Apple, and I'll see you guys in the next one. Bye.